Hi everyone, welcome to the second part of the C-limited valuation exercise. Do note that this video is for educational purpose only. Do not treat this as a financial advice. Always do your own due diligence before making any investment decisions. So this is the Excel sheet that I shared in the previous exercise. Do watch that video first before watching this. I have put the link to the video below. Previously, we derived an intrinsic value of $244 based on the growth and multiples that we had penciled in. In this video, we'll be doing the opposite. We'll be working backwards to find out how the market is valuing C-limited today. I repeat again, this exercise is to find out what the market thinks and not what you think. So this will actually mean inputting in the growth and multiples to actually back derive the $137, which is the stock price today. I'll be ignoring C money given that it's a small part of the total value, so we'll just play around with these 4 boxes in yellow for Garena and Shopee. So the first thing we want to take note that is that the stock price is actually significantly lower than the $244 intrinsic value we derived previously based on the current growth and multiple assumptions. For Garena, right, you can see that the rapid decline in growth rates. So one reason is the number of players has actually grown at a much lower rate as compared to the past. But remember, they can still monetize the game by increasing the pricing of the in-game items to increase revenue. But if you want to assume market is very pessimistic, we can actually pencil in a no growth scenario, 0% here. So if we look at the multiple, right, we also have to adjust this further downwards for 2 reasons. One is that Garena is relying on one game, Free Fire, and it's not as diversified as compared to other game developers who actually have a variety of household games like FIFA, Call of Duty, League of Legends, and many more. Secondly, the multiple actually has to contract to reflect the decline in growth. We can assume the growth rate we can halve the previous growth rate that we penciled in to 8. That's a ballpark assumption. So next for Shopee, we can see the GMV actually shot up in 2020 due to COVID impact. As the economy opens up, Shopee base and also with a larger Shopee base, it's actually harder to sustain a high growth rate of above 100%. So I think the 57% that we got previously from the DBS report is actually pretty reasonable and conservative. So we may not want to change the number here. So the last number that we will need to adjust will be the price to GMV multiple. We will need to adjust this number such that the intrinsic value we penciled in based on the variables here actually equates to the current share price of $137. So if I have to come here and change and push the number downwards, this is not sufficient, it's still on the higher side. Okay, this works now. Yeah, so essentially what I'm doing here is that I'm working backwards the multiple and growth to derive and understand how the market is valuing C Limited as a whole today. So right here you can see the share price, the intrinsic value we work out here based on these assumptions actually equate to the current share price. Yeah. So right here we are actually done with the exercise. Now I would want you to focus your attention on the summary of this whole exercise. So what we know, what we have done so far is we know that actually the current share price implies no growth in Garena and 57% growth in Shopee GMV. The market is only willing to pay a multiple of 8 and 0.5 respectively. So looking at this, right, you ask yourself if these are reasonable numbers or the market has been over pessimistic. Remember we were on the forecast previously? So if your belief remains unchanged, right, the market has actually underpriced the gaming business and the e-commerce business down lower by 52% and 38% respectively in terms of multiple, and therefore implying that the current stock price is actually 45% undervalued. Let's say if your own forecast is worse than what the market has penciled in here, then you shouldn't be investing at today's price. So this is actually a way for you to compare what the market thinks against your own belief. Of course, everyone is entitled to their own views, but I hope all of you can have your own independent thinking and not be a price taker and be led by price movement. After all, this is one of the main objectives why we want to build our own valuation model. So that's all I have. Do check the video on the Free Fire being banned in India. Do note that there's a very important developments on in the whole scheme of things for C Limited. I have put the link below to check that out, and thank you and see you again.